Thank you for joining us. This month, we're looking at home, auto, and umbrella insurance. We're going to get into why this is so important to review, why a financial planner is reviewing this for you. But just first, a couple of notes. There's a few other types of insurance that fit into this category, maybe renters or motorcycle, trailer boat, and so on. I think you'll see a lot of the same principles that might apply, but we're not going to cover those specifically in this webinar just to try to keep it short as possible. And then just one kind of broad disclaimer before we start. Insurance policies can all be different. We're going to show you some examples here, give some general advice as best as we can, give you some things to consider, but we can't guarantee your insurance policy is written a certain way. Some of this depends on the state you live in, the insurance company you're with, and we just can't guarantee that everything has the same definitions, the same legal fine print as we discuss here. And just for an example, my home insurance policy is 68 pages long with a lot of fine print, and I imagine just about everyone else's is too. And to some extent, there's no way of really answering detailed questions about your policy other than just getting into it and looking through those 60 pages. And so if anything we talk about really does resonate with you, causes you to have a question or a concern, we are certainly happy to look into your policy specifically. But just to start, why are we as financial advisors and not insurance brokers reviewing your property and casualty insurance? First of all, and most important, is that insurance plays an important role in your financial plan, mitigating any big risks out there, whether it has to deal with your investments or your income, so maybe life insurance or disability insurance, or for property where you could be left with hundreds of thousands of dollars in losses. That's important for us to reduce that risk. And because everyone has different finances, these insurance policies really should be customized around you. What's right for me is probably not right for you. And think about it, when you go into your insurance broker, they're probably not asking you the same types of questions that we do in a financial planning meeting. Perhaps if you're discussing umbrella, some questions around net worth really come up, but they certainly don't get into the room you have in your retirement plan to cover a house fire, what kind of losses you can afford to sustain before it's going to have a big impact on your retirement plan like we can. And so we have quite a different view of your finances than an insurance broker does. That gives us a much better viewpoint to know and recommend really what is the best policy for you. Besides that, we think we're set up to be able to best act in your best interest. Of course, there's always good and bad apples in any industry out there, but anytime an industry is entirely reliant on commissions, like the insurance industry is, there are incentives out there to recommend products that are in their interest and not necessarily your own. As flat fee fiduciary fee-only advisors, we do not get paid any more or less based on anything we recommend you purchase or forego. And so no insurance broker you talk to will have that structure to reduce those conflicts of interest. And so with that said, let's get into actually reviewing some of these policies. We're going to start and spend the most time with home insurance. If you want to follow along, this is just a screenshot from a typical declarations page that you'll see for a home insurance policy. These are typically very long documents, but there's usually a section early on that summarizes some helpful information like we're showing here. And I think some of these coverages are going to be pretty self-explanatory, but there's a couple points on these coverages that we wanted to make as we go through them. The first big number you're going to see is that dwelling coverage protection. And this is the money that goes towards rebuilding your home if a storm or a fire damages it. And what a lot of people do is compare that number to what they think the value of their home is. Maybe they look at Zillow and look at what the Zillow estimate value is. That's not always the right thing to do or the right thing to benchmark this coverage to. And this is the case, especially if you have an older home, a historic home, have some customizations to your home that are not reflected in the Zillow estimate. Because rebuilding a home can cost much more than the home is worth in some of these instances. We have a new tool that we very recently added that helps us prepare some property and casualty insurance reviews for clients. We'll be showing some screenshots of that throughout this. But one thing that this tool can do is connect with a data set from CoreLogic. This is a company that produces some rebuilding estimates for insurance companies. And this tool looks at labor costs in your area, factors in any recent rise in material costs, factors in your home structure, estimated cleanup costs, and a lot more. And so we can use this tool to really give you a much more accurate figure for what your dwelling coverage should be. Your insurance broker should be able to do this as well, as you are in regularly for a review, but it can be helpful again, as we're doing these periodic reviews with you, we can give you that same type of information. The next coverage to consider is typically what's called other structures. By default, this is just going to be 10% of your dwelling coverage, but that's not always the right amount of coverage for everyone. When you read structures, you probably think of, obvious things that this can cover: detached garages or storage sheds, but this can be useful for covering other items that are very expensive to fix too. Driveways, retaining walls, very nice or big privacy fences. And just know that this is a coverage that you should look at if you have any of these kind of added valuable things, like fancy sheds or retaining walls, because this is very commonly just by default set at 10% of your dwelling, and that may leave you underinsured just depending on the value of your home and what you have outside. The next coverage is a coverage that will vary widely for each person. Most generally, personal property coverage is protection for the value of non-structural items. And I heard another financial advisor describe this coverage as the items that would fall out of your house if you took the roof off and tipped your house upside down. And I thought that was pretty clever and did a really good job of just explaining what this covers. And it's really hard to think about how much all of your things would cost to replace, but it's worth thinking about if you have some valuable items in your home. This is an area you want to pay really close attention to if you have some one-off, very expensive or rare items. So maybe art, any kinds of collections, coin collections, stamp collections come to mind, designer clothes, jewelry, things like that. I'm showing on the right-hand side here some special limitations to property coverage that exist on my policy. Just for example, at the top, you'll see there's a $200 limit on gold coins, for example. And so if you do have any kind of collection, if that's an investment that you have that you keep in the house, $200 does not cover very much probably. And so that's something that you'll want to make sure you get some kind of added coverage to. We'll talk about that later. But be sure that as you're thinking about personal property, if there's anything specific that's over, you can see here some numbers on the right-hand side, $1,000, $2,000, you want to make sure that those items would be covered. The general recommendation here is to keep some kind of inventory of the valuable items in your home. If your house suffers damage from a fire, you're going to need to come up with a list of items that were destroyed that you want to be reimbursed for, and that can be very hard, after the fact. And so keeping some kind of list or spreadsheet is kind of default recommendation and a good thing to do. If that's too much work or just you won't keep it up to date, you can simply use your cell phone, walk through your house doing a recording, and at the very least then, worst case scenario, you'll have proof of items that you had. You can review that video to kind of pay attention to what you had, what would need to be replaced. And at the very least is a good thing to do just to help cover your risks there just in case. Now, getting in or getting away from any kind of physical items and into liability. Your home insurance also has a section for certain liability coverages. This is protection from less likely but potentially extremely costly events. These are things like someone slips on ice on your driveway and gets hurt. and sues you for lost wages and damages, pain and suffering, whatever else they can try to get out of you. Dog bites, trampoline accidents, injuries from a pool, bullying or slander lawsuits are kind of common here too. These are events no one really wants to think about, but could absolutely wreak havoc on your finances. And just so you have an idea of what this tends to cover, I put the top 5 reasons for liability claims here just in case you were interested. This is the top 5 based on volume, not necessarily on claim amounts. But remember, the point of insurance in general is protecting against items that would be really devastating to you. Most people spend a lot of time focusing on smaller items, some personal property item like we just looked at, covering $5,000 in damages to their car, like we'll look at in a minute. But I just about guarantee anyone listening to this is not going to be financially ruined from a $5,000 repair bill, but a significant lawsuit could hurt you very significantly financially. So this is just one of the better bang for your buck coverages that you can get if you are really looking to reduce the risk of these, what could be a very significant event. You can see here $300,000 in liability coverage for this policy costs $25 a year. And just playing around with my policy, it was less than $10 more to get that up to $500,000. As you build up assets, this liability protection amount is something you'll want to make sure stays in line with your rising net worth. And we're going to talk more exactly about how much liability coverage you should have when we look at umbrella coverages later. And lastly, just one quick note that always gets a question or two as we're reviewing policies. You're also going to notice a coverage in this liability section that's called medical payments to others, something along that line. And what always jumps out to you is that it seems to be a very low amount. You'll see $1,000 here. That's a little low. I think we see $5,000 a lot. And I don't think we see more than 10,000 very often at all. And if you are, if someone is seriously injured on your property and sues you, your larger liability coverage will kick in and protect you for higher medical expenses than this $1,000, for example. But let's just say that everyone agrees that through no fault of your own as the homeowner at all, a friend somehow gets hurt on your property and needs an x-ray. They have a high deductible health plan, so they're going to have a bill of a couple $1,000s. This coverage F can be used to pay for that. And essentially, this is an olive branch that insurance companies offer that pays for some bills for minor injuries in the hope that it avoids a lawsuit. And again, even if everyone's friendly, if your friend can't afford to pay a $5,000 medical bill, they might feel just compelled to sue to get some money. This is something that insurance companies do to hopefully prevent that. It usually doesn't matter who's at fault. It's just a more simple way to pay for smaller items before it hopefully grows into a much bigger issue. And I think it's always good to have some sort of data around this as you're thinking about insurance and what you're really protecting. Here is a result from a study from the Insurance Information Institute about the average frequency and magnitude of home insurance claims. And so the claim frequency column is the percent of policies that have a claim in any given year. So for example, 0.26% or about 1 in 385 homes had a claim for fire or lightning damage, and the average cost of that claim was about $83,000. For property damages, remember too that these are averages and are costs for repairing the average home, which is somewhere around just north of $250,000 today. And so if your home is 500,000 in value, for example, I don't think it's crazy that you should think your average property claim for any one of these would be about double the numbers here. Then liability numbers are below also. You'll see it's a much less likely scenario, but relatively high numbers. So about 1 in 1,000 policies have a liability claim each year. And you can see that average damage or the cost there is relatively high compared to some of these other ones that you see above, theft or damage from storms. And again, it's really tough to give specific advice on any kind of home insurance items just because everyone's situations do differ and policies vary so much state to state and insurance company by insurance company. A couple scenarios that are just worth throwing out there that you should pay more attention to if these apply to you. If you're in any kind of homeowners association, either a condo or a community, there's special types of coverages that you can get that cover assessments. And so this would be, for example, if you're in a condo and a bad storm damages the complex and there isn't enough cash in the bank account to pay for repairs, the association can come and bill all the members of the association to pay. We saw this in the derecho come around, and there's other cases in North Liberty right now. There's a complex that had a very bad fire, and they're having to do special assessments of upwards of $25,000 for all the tenants because some people can't afford to pay, and so they're having to bill the people that can afford to pay much higher amounts to try to make up for get some amount of money in to repair this complex because the finances weren't properly managed. Just an example of what can happen and why this type of coverage can be really valuable. For those with a lot of trees, especially trees right around their home or along a driveway, debris removal and restoration of trees can be really expensive and is not something that tends to be very standard in policies. You'll normally see some kind of max of $1,000 or $1,500. And if we saw again from the derecho here, if you have to hire help to clear trees, it can be $500 to $1,000 per tree to get that removed. And so there are coverages that can provide more protection to you in the event that you lose a lot of trees in a windstorm. And then there's lots of single item coverages. Again, if you have any kind of one-off collectible item or valuable collection, you want to make sure that that is covered because by default, it very well may not be. And so I had talked earlier about some new software that we have. This is just a screenshot of some property and casualty reports that we can produce for clients, help us go through a review with you and bring up a lot of points just to make sure you're aware of some options that exist within your policy. And so again, what we are doing is looking at some liability limits, looking at protection limits, and making sure those numbers there are enough. And then looking at some of the specifics in the policy are tailored to you. Maybe there's things you're paying for you don't need, and maybe there's things that you're not paying for that you do need. This is just a quick example and obviously would be customized based on your insurance and your situation. Now, getting into auto insurance, a lot of these are going to have some very similar principles. There's liability coverage, there's kind of property or coverage of physical items also. But just to give a quick overview of some terms that you'll see that are important to consider based on your situation. Again, on the declaration page, you're going to see some kind of summary early on that shows the type of coverages you have, the limits of those coverages, and very likely the cost to you as well. And so first on the list, and again, usually one of those higher dollar amounts that you'll see is coverage for bodily injury. This pays if you are responsible for any kind of injury or death, also pays for any legal defense if you get sued as a result of any kind of auto accident. Property damage is covering the physical items that get damaged. And so other person's car, a building, if you run into a guardrail on the highway, for example, the state will try to come after you for the cost of repairing that. This is what's going to help, pay that, protect you from having to come out of pocket for that. And then you'll see another, usually some of the bigger numbers on the policies, uninsured or underinsured motorists. This covers injuries to you or anyone in your car from accidents with someone that doesn't have insurance or doesn't have high enough limits to pay. And so even if someone has insurance, they might only carry the state minimums for liability, which, again, varies by state, but might just be $50,000. If you are driving a nice car and end up having to go to the hospital, that's going to be more than $50,000. Their insurance won't pay. This allows you to still have protection in case the person that hits you doesn't have adequate insurance. One thing that, again, just varies by states and insurance companies is underinsured or uninsured property. If you're hit by someone that doesn't have any insurance at all, will the damages to your car be paid for? And it just varies states by state. Sometimes you'll see a separate item here about uninsured motorist property coverage. And in other states, if you want that, you'll have to pay for collision coverage. And so you'll see listed lower on in the policy. Comprehensive and collision are optional items you can add to help protect you in various situations. So comprehensive kind of covers non-accident items. Think if your car is stolen, if it floods and is totaled out, if a tree falls on it, if there's hail, those types of scenarios. Collision pays for damages to repair your car from a collision with another object, usually another car, but could be something else. And these are items to consider if have a very valuable car that you're not able to replace, for example, might be something you can consider reducing if you know that you can very easily handle the cost to replace your car. And again, just like we showed before, I thought it'd be good to show what you're protecting against. And so this gives you a quick idea of just some general frequencies and costs of different types of claims. And so again, the liability side is shown at the top here is more rare. So you can see last year, 2 years ago, 2022, for example, about 0.74% of auto insurance policies had a liability claim, and that average cost was $24,000, for example. What is much more common, but usually less expensive, is the physical damage type of claim. So collision, comprehensive, you can see get somewhere around 1 in 20 policies per year have a claim on them for a cost around $6,000. And again, just to give you an example, we're kind of running through a lot of items here. There is a lot of detail that you should consider on your own policy with this. This is a look at a report that we would generate for you based on the specifics of your policy, of your finances, to give you some more concrete recommendations on your policy and the level of coverage that you have. And then lastly, this is going to be really quick because it's relatively simple, but it is very important. And so you'll notice there we listed some liability protection amounts on home and auto. They were around $300,000. Some insurance companies allow you to raise that to $500,000, but that's probably the max. And as your assets increase, you'll likely want more than 500,000 in liability coverage, and that's where umbrella insurance comes in. This is something that sits on top of home and auto and provides additional protection from liability to you. So for example, here we're showing a screenshot of an umbrella policy, and you'll see it adds $1 million of coverage. And so before we were showing an auto policy with $300,000 in liability. If this person added $1 million umbrella, they now have 1.3 million of total liability protection. The liability on your home and auto gets claimed first, and once that's maxed out, then your umbrella policy gets tapped. And because this is very rare to need, you'll see premiums are very affordable. It's usually around $300 or $400 for $1 million, $300 to $400 per year for $1 million of coverage. And this amount can be increased. You can get just about whatever amount, 5 or 10 million of protection if that applies to you, but is something that's very important to consider. Um, why we're not spending a ton of time on this is because who needs umbrella, whether you need umbrella, gets pretty specific. It depends on the state that you live in. Many states have different laws that protect different amounts in your retirement accounts or, protect everything in there. So for example, in Iowa, items like your IRA are very well protected. In states like Minnesota, California, you have much less protection there. And so, if you're a California resident and have $500,000 in your retirement accounts, you probably are ready for an umbrella policy. If you're in Iowa, that may not necessarily be the case if it's all in a retirement account. Regardless of net worth, income is something that's worth protecting too. If you are a very high income household, that is something you want to protect because lawsuits can garnish wages. So even if your net worth is not there, but you have high income, you want to make sure you have umbrella to protect you in that case. And I didn't know what to call it. I put visibility here, but if you drive a very nice car, if you're coming out of, if you're a doctor and are leaving the hospital every day and you happen to hit someone in the parking lot, it's going to be obvious you're a doctor, right? If it's obvious that you have some kind of wealth or assets, there is a certain extra risk there, right? And certainly a case for having umbrella, just because there are certain people that would, unfortunately target you because of that. Some considerations with umbrella, there are usually minimums that are required. So you are required to buy up a certain amount of liability on your home and auto to make the umbrella qualify. And so this can be something, if you have an umbrella policy at a different insurance company than your home and auto, that can get you in trouble. So you want to make sure everything is kind of in line, meeting the requirements to make sure you actually have this coverage. And in general, we find umbrella just provides a very strong peace of mind for a relatively low price. And it is one of those things that is hopefully very rare, but something that for a few $100s can, if it helps you sleep better at night, is certainly, from our point of view, a very good trade-off. And so in general, we looked at these few different types of property and casualty insurance. The one point I hope that you take away from here is that insurance should be very personal. What's right for one person is not right for another person. But a few general mistakes that we see: buying an insurance policy based only on price is something to be careful to avoid. A lot of these insurance agencies are kind of just, again, commission based and transactional, right? They want to show you a quote, have you purchase. And so they tend to lower coverages to show you a lower price. And insurance is something not to skimp on. Don't save yourself $50 a year to lower your liability by $200,000. It's just one of those areas you want to make sure you're paying for adequate coverage. It's also one of those things you want to review periodically. There's no hard line here on the number of years, to go between reviewing. If it has been 5 years before you've gotten a quote from someone else for your home or auto policy, it's probably worth doing for a couple reasons. Things like inflation, you want to make sure the value that you're insured against has kind of kept up with how your home is appreciated. There's definitely, insurance is a pretty competitive marketplace. There's definitely companies that are coming in trying to gain market share by writing a little bit lower premiums. You can take advantage of that. And just in general, don't let this sit in the drawer for a decade or more. It could be worth a good amount of money just taking the time to review. And a good insurance agent will be able to very quickly shop across multiple companies, and it won't take a lot of your time. And then in general, kind of related to the buying a policy on price, generally it's a mistake to focus on some of these smaller items and kind of avoid thinking about more catastrophic events. Remember, insurance is out there to protect against really big risks. Don't buy insurance on your sunglasses or your cell phone before you have good liability insurance, just for example. And it tends to be something that is very cheap to insure these higher catastrophic amounts. Just for example, on my auto policy, it was $8 a year to add $200,000 in liability. And so we are not talking about having to change your retirement plan to make some of these coverages affordable. It's something you want to check and make sure is there because it's very important. And so with that, again, hopefully you found it valuable, just a quick review. And please know that this is something for clients, we are, I think, much better equipped to spend more time with you, give you much more detail on your specific policy, and hopefully this helps show you why it can be important to review these. And so if you have any questions, please reach out. We're always happy to help. And if not, thank you and enjoy the rest of your week.